tech
Absolutely.
in trouble?
Yes. Well, you know, they've already baked in a lot of the effects of this longer duration asset.
God, they pulled back so much, right?
They've pulled back so much already. But, and the question is, how much more do the yields have to go? And that kind of brings us to our thoughts on inflation. I mean, the Fed is so fixated on 2% inflation. And the question is, you know, why is 2% the holy grail for inflation rates? Why can't it be 3%?
It might be.
It might be.
So if you like Nvidia, okay, this fits right into the conversation. So are you making a call at the same time that, okay, this stock has gotten destroyed, come down a lot, and we think bond yields are topping out, and that's why now can be a decent opportunity to get into that name because we think most of the damage is already over? Yeah,
so if you look at Nvidia, it's a fallen angel. It's down 65%. It produces cash flow. And if you can just look through this divot in earnings, yes, the earnings have come down significantly, over 50%. There is cyclical exposure to the consumer, even to the data center, which is slowing. However, if you can look through 24, this is a business that will grow 30% for the next 5 years, in part because of the end markets that they're levered to. I mean, if there's a new set of FANG that is going to come out of this, I think Nvidia is going to be anointed as one of them.
That's like one of the more difficult things, I guess, for the average investor who's watching is to think 5 years and not 5 minutes.
Yeah.
But we live in a 5-minute market, right? It's so volatile. You're so afraid to buy some of these stocks that have gotten cut in half, in some cases 2/3. Because you're afraid the market's going to go down more and you're going to have a better opportunity to get in. You're saying if you're a long-term investor, Nvidia is a buy here now.
I do think it's a buy here now. If anything, it will be a relative outperformer. Not saying that it won't go down at all, but it should relatively outperform over the next 2 years.
Okay. Lilly is another pick. Healthcare remains a favored space for most now. How does this factor into your view of the overall market?
Yeah, so it absolutely does, in part because Lilly is a pharmaceutical stock that sells insulin, right? And insulin is it's a staple-like characteristic, and everyone needs insulin, whether you are in a recession or not. However, what's exciting, you know, we like to invest in innovation. And Lilly is an innovator in that they have produced a new drug that is for obesity. So it is 25 to 30% reduction in weight loss. And, you know, we think that the TAM for this obesity drug is 2 times greater than their core market today.
Wow. And lastly, LVMH. You're playing on globally, high-end consumer, still holding in the face of all the stuff we just talked about.
Yeah, absolutely. I mean, you have a high-end consumer that is relatively recession-resistant. You know, LVMH has pricing power, surprisingly. Since 2019, their pricing is up on the order of 20 to 25% for handbags. The weakening dollar is a net benefit to them in terms of units. Everyone is rushing to Europe to go shopping. And so we think that they're relatively recession-resistant. So, again, we look for businesses that through a recession, they can continue to grow.
Are you on the lookout for more stocks than you otherwise would be, just because you think there have been enough dislocations in the market across the sectors that you like?
Yeah, I mean, across the market, there are opportunities right now. Now, you know, it is tricky because the multiple for the market can still compress from here. So it is not necessarily a call that the market is done going down, but if you look at where we've come from, we came from 4,800 on the S&P. In market prognosticators, even we think it could go to 3,200. We're at 36. The majority of that move downward in the market has already occurred.
Right. The problem is, as we've discussed from the top of our program today, no one quite knows what the earnings are going to be, and you don't even know what the right multiple is going to be on top of earnings you don't know the answer to.
Yeah.
Which makes stock picking a little more difficult. However, as we've discussed, if you're a longer term investor, in some cases it might not matter. You may not get the bottom, but you're going to get in at a reasonably attractive level, one hopes.
Absolutely.